Let me know when we're good to go. A warm welcome to everyone joining us today on this webinar hosted by the International Ethics Standards Board for Accountants, or the IESBA. Today, we'll be discussing the proposal in the tax planning and related services exposure draft, which was issued on February 17, with a closing date for submission of May 18. I'm Carla Vision. I'm a principal with IESBA and staff lead on this project supporting the tax planning task force. Next slide, please. Today, we're very fortunate to have Andy Mintzer, who will be taking us through the key proposal in the exposure draft. Andy is licensed in both US and Canada. His CPA career spanned over 40 years. He's a principal at Hemming & Moss LLP, providing forensic accounting services. Previously, Andy was an audit partner with EY, and he has served 3 US standard-setting bodies of the AICPA. A former California Society of CPA chairman, Andy received a Bachelor of Arts and Master's of Accountancy degrees from University of South Florida. I would like to brief participants of a few house rules before we start. You're welcome to post your questions in the chat function anytime during the session, and we'll endeavor to respond to all of your queries during the Q&A session at the end. The presentation slide deck will be made available to participants after the session today via the email address that you registered. We will also be posting a video of the webinar in due course, so you'll be able to access it at your convenience. Next slide, please. Some of you will be very familiar with the news headlines in relation to organizations or individuals who have been criticized or found to have breached the code of ethics or conduct in carrying out tax planning services. Starbucks, for example, as few other famous household names, have been found to not meeting the corporate tax obligations in the jurisdictions that they operate in. Separately, a tax practitioner was found to have been breached of the fundamental principle of conflict of interest for sharing confidential information about government plans to target multinational tax avoidance with the firm's clients. These are some of the examples of the cases that are prevalent in the market these days. We won't be going into detail of these cases today, though these are just some of the scenarios where we view the Code of Ethics can provide some form of guidance to professional accountants should they encounter an ethical dilemma in these circumstances. Next slide, please. Before we go into detail in the proposals that we're presenting to you today, I'd like to give you a bit of background how this project came about and how did we come out with the proposed ethical framework. In early March 2022, the IESBA announced that it would host a series of global virtual roundtables on this project. And the roundtables aim to bring together a broad range of stakeholders to discuss state of play on the topic of tax planning and explore how the IESBA could formulate a proposed ethical framework to guide professional accountants in business and in practice when providing tax planning services. Next slide, please. The 3 global roundtables were organized to cover specific regions, as you can see in front and in the graph: the Americas, Europe, Middle East, Africa, and Asia Pacific. We had a total of close to 100 delegates who participated in these events. They represented various stakeholder groups, including regulators, public authorities, representatives of the legal profession, national standard setters, preparers of financial statements, professional accounting firms, and the academia. Next slide, please. The input we received was very rich and diverse. The discussion highlighted how intertwined, complex, multi-dimensional the ethical consideration can be in addressing tax planning services. The discussion generates some initial practical observations, and the IESBA is of the view that focusing on developing a principle-based framework is an appropriate way forward because of the variety of tax laws, regulation, and practices around the world. So it is very important that we keep to the global applicability of the code itself. Equally, we're very conscious that it is important to avoid being drawn into analyzing the merits of a particular tax strategy or adopted tax strategy plan or adopted by employing organization or clients. The next slide, please. The IESBA is proposing an outline of an ethical framework to provide practical guidance that would be globally applicable without being overly prescriptive. That is to assist professional accountants in exercising judgment in navigating complexities and uncertainty of tax planning. Next slide, please. As such, we're proposing 2 new sections, 280 for professional accountants in business and 380 for professional accountants in public practice. Both sections will apply to all entities, whether it is a public interest entity or a non-public interest entity. Section 380 will apply to all types of clients. In a slide that in front of you, we've also included the link to the expert memorandum, where I have provided more detailed explanation on the various proposals. Without further ado, I'll pass the floor to Andy to take you through the key proposals in the exposure draft.
Okay, terrific. Thanks, Carla, and welcome everyone. Glad you joined us today. So my objective is to just walk us through some of the key proposals of the task force to help you both get familiar with what of the IESBA, to help you get familiar with what it is that we're proposing in this exposure draft, as well as to help guide you as you answer our request for comment letters that will be due in about 3 months. So so an outstanding overview of the process for the task force to develop into the exposure draft that IESBA has just recently approved. And for those not familiar with our code, there is the part 2, which is for PAIBs, professional accountants in business, and part 3 for professional accountants in public practice. The IESBA has largely mirrored the provisions between those 2 sections, but I certainly would recommend folks, especially if you're interested in management accounting and accountants in business, to focus on the section 280, and the section 380 is for public practice. For the most part, because of our time limitations today, as well as the duplication of objectives and our direction of travel, I'm going to focus my comments on section 380. So if I can have the next slide, please. So the key proposals in the exposure draft that I'm going to discuss, and each of these will be followed up with some additional slides, include the role of the PA acting in the public interest, what our determination of credible basis is, where it came from, and how operational we believe it is, as well as the consideration of the overall tax planning advice or recommendation. If you've been following the development of our standard, this is sometimes referred to as a stand-back test, and we'll discuss that when we get to it. Other important issues that are addressed in these exposure drafts are the multi-jurisdictional tax benefit, the application of the conceptual framework, disagreements, as well as documentation. So if I can have the next slide, please. So first, we'll talk about the role of the PA in acting in the public interest. May I have the next slide, please? Thank you. So, the first sentence of our code of conduct is a distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in the public interest. So as we develop standards and as we consider what these standards do for PAIBs as well as PAPPs, we have the public interest in mind. But PAs are expected to exercise their professional judgment. And we've determined that this exposure draft, however, should not attempt to define or describe the public interest in the abstract in the context of tax planning. But we do acknowledge that a large part of acting in the public interest is to assist the clients or employing organizations to comply with tax laws and regulations. So the PA plays an important role rather than assuming responsibility of ensuring compliance with tax laws and regulations. And we also recognize that clients and employee organizations have the responsibility to pay their legally assessed taxes. And there may be, however, reputational risks to clients and employing organizations and to the profession at large. And those are important considerations. Now, let me also first give another indication that as you read these standards, they are devoted to tax practice, tax planning in and of itself, as not as a non-assurance service, non-audit service provided to an audit client. In the past couple of years, the IESBA has issued a non-assurance standards standard, and it affects the tax practitioners to the extent that you're also an audit client as well. This is not that. We're dealing with tax services provided to clients and not part of an audit engagement. So that should help frame things as we go through the document. So let's look at the next slide, please. These are very important concepts that set up our standard. And really, we heard this loud and clear from our outreach activities and from our roundtables. And we acknowledge that clients are entitled to organize their affairs for tax planning purposes. Specifically, it's they should pay their taxes as determined by relevant tax laws and regulations. So we're grounded by the tax laws and regulations in the respective jurisdictions that the taxpayer operates in. In this regard, the PA's role is to advise their client on how to best meet their tax planning goals. In addition, accountants play an important role in assisting their clients meet their obligations and not seek to circumvent them through tax evasion. This is usually not a very controversial topic. We're talking here about a non-compliance with tax laws. And as we'll get into our gray zone and our clearly okay zone and clearly not okay zone, this document does not really deal with violation of laws. That's another part of our code. We do acknowledge, and this is an important point for professional accountants to consider, is that while professional accountants provide this assistance, it might involve certain tax minimization arrangements that, although not prohibited by tax laws and regulations, might create threats to the compliance with the fundamental principles. So what we're looking here is an overarching broad view of possibly threats that might be created when there's a seeking to minimize taxes. Not that it's prohibited. That's as we mentioned, clients and organizations and taxpayers are permitted to organize their affairs in accordance with the tax laws and regulations. But the fundamental principles that we're concerned with are 5 fundamental principles of integrity, objectivity, professional competence or due care, confidentiality, and professional behavior. So I mentioned that because I realized with regard to tax planning services, some practitioners are not necessarily as familiar with our overall fundamental principles. Can I have the next slide, please? Okay, credible basis. So this is a word that the IESBA is using to define the target behavior that is being sought for the professional accountant. In our outreach, in our roundtables, we heard that around the world, a whole bunch of different terms are used. We attempted to not find a term that had rich and emotionally charged or legally grounded wording in jurisdictions. So we avoided some other words, but we settled on credible basis as the one most affecting what it is that we're trying to achieve from an ethical perspective. So if I can have the next slide, please. So here are our proposals. So we have clarified that the professional accountant should only provide recommendations or otherwise advice on a tax planning arrangement if the PA has concluded there is a credible basis. That we do also say that doesn't mean that if a PA has concluded an arrangement doesn't have a credible basis, that this isn't to prevent them from explaining that to the client as to why there isn't a credible basis. We also have some application guidance in the 2 sections in 380. It's point 11A1, which complements this particular aspect. We also clarify that determining whether there is a credible basis will require the PA to exercise professional judgment based on the tax laws and regulations prevailing at the time of the assessment. The IESBA also believed that the credible basis must ultimately be anchored to the relevant tax laws and regulations, hence credible basis in laws and regulations. Let's look at the text a little bit more for the next slide, please. So this is our section in the 380 section for the basis of recommending or otherwise advising on a tax planning arrangement. And we realize that there are different words that different practitioners use when they communicate a particular approach to a taxpayer as to what they do, whether it's recommending or advising or other words. But it's we believe that recommending or otherwise advising captures the essence of communicating to the taxpayer what would be a mechanism that would have a credible basis. So we clearly state that a professional accountant shall only recommend or advise if the accountant has determined there is a credible basis. I've already described it. A1 is that there's nothing to say. You can't describe to them why it is a particular circumstance does not mean a credible basis. But look at 380.11A2 on the bottom of the screen, because this is where a lot of the art will be and where we heard from our roundtable participants and the board considered. The determination of whether there is a credible basis involves the exercise of professional judgment by the accountant. This determination will vary from jurisdiction to jurisdiction based on the relevant tax laws and regulations at the time. So the task force and IESBA fairly quickly concluded that from a global ethical construct basis that we could not develop a particular benchmark that would work globally because of the 100+ jurisdictions that are members of IFAC. They have different tax laws and regulations. And so what will be credible will vary based upon those tax laws and regulations in effect. And some countries have robust tax laws, or regulations, which especially in the United States, I'm familiar with, where the professional accountant or the tax advisor can take a position on a tax return, even if there's a less than 50% chance of achieving, as low as 20% if you read the regulations. But that's based upon establishing a sound precedent, as well as filling out a particular tax form and disclosing the relevant facts to the tax authorities. So with a substantial authority, even if there is some doubt, it is possible. And this is, we've heard this actually in many other jurisdictions. And we've heard that this is also part of the process that the tax regulators embrace in terms of being able to define what is in accordance with the tax laws and regulations and what isn't. That is the process of having a ruling or an adjudication by those authorities. But the takeaway here is that the professional accountant can move forward with a recommendation or advice to a taxpayer if there is a credible basis, and that credible basis is a matter of professional judgment based upon the relevant jurisdictional tax laws and regulations. So let's see if we could go to the next slide, please. So our formal name in the section of the exposure drafts, when you get to it, is consideration of the overall tax planning or advice. This has been referred to colloquially as the stand-back test. So let's go to the next slide, please, and I'll tell you why we call it that. The intent of R380.12, so it is a requirement, is the stand-back provision, is a consideration. And we've underlined that word because that is what is required, a consideration by the PA of three things: the reputational, commercial, and wider economic consequences that could arise relative to how stakeholders might perceive the tax planning arrangement. This is a good faith consideration based on the PA's knowledge and of the context and the circumstances at the time. There is no expectation that the PA will be subject to hindsight judgment. It's not built in certainly to the standard, and it's the PA's, not someone else's judgment. And this is not about tax morality or social justice. Tax laws and regulations are are enacted or passed in sovereign nations or subdivisions of countries, states or provinces or counties, based upon whatever the legal construct is. And so it is up to those authorities to determine how much taxes they need and why they need it and how to enact it. It's the PA's job to provide credible basis based upon those tax laws and the tax legislation. So let's look a little bit more at the text on the next page. Next slide, please. Thank you. So we have two requirements here. The first requirement, 12, R38012, is in addition to determining there's a credible basis for the tax planning arrangement, the PA shall exercise professional judgment. There's a typo I noticed. Exercise professional judgment in considering the reputational, commercial, and wider economic consequences that could arise from the way stakeholders might view the arrangement. Okay, so what's going on here? First of all, please keep in mind that the stand back test there's already a conclusion that there is a credible basis. So however that's determined using professional judgment in the jurisdiction based upon tax laws and regulations, the PA has determined there's a credible basis. And then there's the stand back test to consider the wider, the reputational, commercial, and wider economic consequences. We have a couple of application guidance paragraphs to help convey what we mean by reputational and commercial consequences, or the wider economic consequences, what that might mean. But the last requirement, 380 of this page on 380.13, is if having considered the matter set forth in paragraph 380.12, the PA decides not to recommend or advise a tax planning arrangement that the client would otherwise like to pursue, the accountant shall inform the client of this and explain the basis for the accountant's conclusion. I should also tell you that as we were developing this and speaking to practitioners and doing our outreach, I think we're of the belief that this particular stand-back test, for the most part, for most day in and day out tax planning services, will be extremely easy and not that problematic. It's the troublesome items that sometimes catch headlines that may take an additional exercise of professional judgment. And so this is alerting the PA to that effect. So let's please go to the next slide, please. As I mentioned, as we learned in our outreach, that the multi-jurisdictional tax benefits is something that is a potential threat to compliance with the fundamental principles, and something that the IESBA determined was important in the public interest to include in these two sections. So if I can have the next slide, please. The exposure draft clarifies what the ethical issue is that might arise for cross-border tax planning versus when there are tax benefits to a client or employing organization. And let me also stop and interrupt the flow here. Keep in mind that what IESBA has attempted to develop is a construct of ethical behavior. That is ethical behavior for the PA who acknowledges their public interest role to act in accordance with our fundamental principles of integrity, objectivity, professional competence, confidentiality, and professional behavior. It is not a practice standard. It is not a standard of practice of how to fill out a tax return, although some of these items I think are certainly in that vein. But keep in mind, what we had our eye on was the ethical construct of providing tax planning services. I certainly will agree that there's in this proposed exposure draft, there is definitely some practice guidelines, but it is all meant to be grounded on maintaining and identifying threats to the fundamental principles that I mentioned. For example, 380.14a2 describes the relevant factors the PA might consider in determining whether to make the disclosure noted in the section when there are cross-border transactions or arrangements that might catch the eye of the various jurisdictions, there is a consideration process about making disclosures. We give examples of factors. They're not meant to be exhausted, of course. If there is a view that we've left out a major factor, or if any of the factors or examples we provided in the exposure draft are confusing or off, please definitely raise those in the response to IESBA during this consultation period. In this regard, in this particular section, because of perhaps heightened requirements for technical expertise, a question was raised about the involvement of external experts. This might apply to other areas of providing tax planning services as well. This has been scoped out of this proposal, so we don't address tax experts, provide additional guidance on them. But there's a project that IESBA has undertaken also on that task force, but we're looking at the broader issue of, from an ethical construct, PA being involving external experts. So that will be tracking along, but you won't find the answer here in this proposal. If I could go to the next slide, please. Okay, now we're up to the application of the conceptual framework. So I'll call on the next slide for what is growing to be a very famous graphic that we've had during this process. And we've used this process to explain what it is that we've had our eye on in terms of the ethical construct of behavior. And we're not really dealing with the clearly legal, because those should be very easy circumstances to deal with, where there is no uncertainty. And as I mentioned, the clearly illegal, that's a non-compliance with laws or regulations. So that would, of course, get us into the no-CLAR section. But we're dealing with the gray zone and the ethical consideration specifically for those times that we're operating in the gray zone. We've identified in paragraph 17, 38017, which I will get to in a bit, some of the considerations of how the conceptual framework applies. So let's look at some more of the text. So if I can have the next slide, please. Okay, these are what we've identified as circumstances of uncertainty, which at least I like to think of it means that we're operating in, the taxpayer is operating in the gray zone. And so circumstances that might give rise to uncertainty include a whole range of topics that tax practitioners should hopefully recognize. Perhaps difficulty in establishing just the adequate factual basis. What are the facts? Difficulty in establishing a basis for assumptions that might need to be made. And perhaps most notably, the lack of clarity in tax laws and regulations and their interpretation, which could include gaps in tax laws and regulations. What I'm thinking of is when a legislative body passes and signed into law a tax law, but the tax authorities don't have enacting regulations to tell taxpayers and professional accountants how this is going to be applied, or where the legislatures have just made a gap in their laws. Challenges to previous court rulings, conflicting tax laws and regulations, especially in cross-border transactions. Innovative business models not addressed by current tax laws and regulations. And just also the complexity in interpreting or applying the tax laws and regulations from a technical or legal point of view. And if there isn't a legal precedent, which will continue to be the case as new tax laws and regulations are enacted, that there's always a certain spot in the practice of before the tax laws come into regulations are work their way through a judicial or regulatory oversight process that gives the taxpayers and professional accountants a ruling or a precedent. Perhaps a lack of clarity regarding the economic purpose and substance of the tax planning arrangement, and also topically and current event-wise, perhaps the lack of clarity about the ultimate beneficiaries of the tax planning arrangement. If I can have the next slide, please. So those what I just read were perhaps examples of situations that give rise to uncertainty, but now we have a requirement that when there is uncertainty as to whether a proposed tax planning arrangement will be in compliance with the relevant tax laws and regulations, a PA shall discuss the nature of that uncertainty with the client. Now, we're not prescribing a specific practice element of what that discussion must entail. I think it would be the professional judgment of the accountant and would depend also upon the degree of the uncertainty and the materiality of the item and how complex it might be. In other words, some might be very easy to discuss, some might be more problematic. But the discussion serves a number of purposes, which includes explaining the PA's assessment about how likely the relevant tax authorities are to have a view that supports what the PA has said, or considering any assumptions that might need to be made or changed, perhaps obtaining additional information from the client that might reduce the uncertainty, and also discussing the reputational, commercial, or wider economic consequences of pursuing the proposed tax planning arrangement. And then perhaps finally for this list is discussing potential courses of action to mitigate the possibility of adverse consequences to the client, including perhaps consideration of disclosure to the relevant tax authorities if it's permitted in the particular jurisdiction that they're operating in. Clearly, if it is permitted, I mean, in some jurisdictions, I know there are certain requirements. If I could carry on a little bit more about the gray zone with the next slide, please. So in paragraph 380.17, which are long sections with lists of items that we have not replicated here, but I'll refer you to the exposure draft for those. It provides clarification on guidance of the types of threats that might be created when providing a tax planning service. That would be in 17A1. And then we have clarifications to the guidance and provide examples of actions that might eliminate the threats or actions that might be safeguards against the threats. The list of safeguards is probably longer than elimination, because to eliminate a threat really means make it go to zero, which would include some very dispositive measures from that perspective. Okay, a couple more topics to discuss before I open it for questions. The next slide, please. Okay, disagreements. We've considered disagreements, and we've got some guidance, which is described on the next slide, please. So the exposure draft discusses a sequence of steps the PA should take if a disagreement with the client arises. The circumstance is about a disagreement over a tax planning arrangement the client wishes to pursue against the PA's advice that there's a credible basis. So again, keep in mind that our standard from an ethical behavior construct is the PA is required to determine that there's a credible basis to provide or recommend. If a client wishes to pursue something where the PA has not made this determination or believes that there is not a credible basis, then this is the disagreement. This, as I mentioned, was worth repeating because I think it takes some time to understand that this is not a situation where the client wishes to proceed with something that has a credible basis, but that the client, that the professional accountant has determined when they've considered the commercial, reputational, and wider economic consequences that they have decided not to make not to make that recommendation. This disagreement is going forward with something for which the PA does not determine there is a credible basis. There's also guidance to include. There are also provisions for guidance for the PA to consider communicating the details of the disagreement to those charged with governance if deemed appropriate, depending upon the facts and circumstances, the significance of the item involved, the judgment, et cetera. But we can't know what the source of the disagreement. We can't evaluate all disagreements equally, but we've constructed a framework for how to escalate what the PA would do from an ethical behavior. And let's go to the next slide, please. Documentation. We've heard a lot about documentation and within the practice of taxes. So can I have the next slide, please? So again, this is a proposal for ethical behavior, not a proposal from a practice standpoint of how to do tax planning or tax preparation well. So the proposal encourages but does not require PAs to prepare documentation, from an ethical construct. It's consistent with other provisions in section 2 and 3 in the code, where the documentation of what a PA does is encouraged. But again, this is an ethical construct of the PA going through the process of advising the client that they're required to establish the credible basis exists, and they're required to consider the stand-back provisions that I had discussed. But we do describe the importance of documentation, notably in the paragraphs listed here on this slide, and how the documentation will assist the PAs. It's hard to argue that it's not a best practice, but from an ethical construct, from an ethical establishment of ethical standards, the proposal from IESBA is to encourage but not require. So speaking of the proposal, let me just cover a little bit on the next slide, please. So where we've gone is the IESBA approved the project proposal in late 21. We had this process where we had the discussion of the issues with IESBA. We discussed with our oversight CAG group. We had the roundtables that Carla has mentioned, that I've mentioned too. And ultimately we approved the exposure draft just a couple of months ago in December. And within the last week to 10 days, we issued the exposure draft. So we're in the consultation period now that ends May 18th. When we get those responses back, the tax planning task force will thoroughly review those responses, discuss them with IESBA, and then we'll consider them at our September meeting with IESBA with the goal in mind of issuing a final standard in December. So in order to do that, I certainly would appreciate, I think all of the members of IESBA and certainly the task force would appreciate that if you've got consultations to provide, guidance to provide, that to look at the exposure draft and please provide us with the guidance. Again, as another reminder, I discussed for the most part using 380, which is the professional accountants in public practice. But there's also 280, which is for the management accountants, the professional accountants in business. And so please also consider that as appropriate in determining your feedback to IESBA, which will be warmly welcomed and seriously considered. So Carla, that's my overview of the provisions in the exposure draft. So I think my turn now to turn it back to you to moderate for the questions.
Thank you, Andy, for the informative session. We do have one question that came from the participant, and it's about the stand-back test, as we've had a lot of discussion at the board meeting with stakeholders as well. So the question is, can you please provide insight in regards to the use of phrase, the way stakeholders might view the tax arrangement? And that's the requirement that's in the stand-back test.
Sure, and I think I would also recommend to look at the explanatory memorandum that came out with the exposure draft to provide context. But I think hopefully this is a satisfying answer. I think we mean it from a very broad perspective. It's that it is the wider consideration of how the public might view the tax planning arrangement when they learn of it. Now, that's again based upon the PA's current knowledge and assessment, based upon the PA who operates in a tax planning arena, being abreast of headlines and so forth. But it's the type of situation where we're trying to avoid, again, from an ethical construct, although recommending to a client a position that is a credible basis. In fact, it might even be in the green zone basis. But if the PA is aware of commercial or reputational or wider economic risks or consequences in the way stakeholders might view the arrangement, that they are to take those into account, so that if they have information to share, then they could share it with the client, and the client wouldn't be blindsided with something that perhaps the PA had already known and considered. So the short answer is it's considered very broadly, but what the objective is to determine whether or not there are these wider commercial, reputational, or economic risks and consequences that may occur. So it's a broad, wide consideration.
Thank you, Andy. I don't see any more questions from the participants, and there's no raised hands. I will allow for about 30 seconds or so if someone else might have another question. But in the meantime, I just had a question that was posted offline in terms of when we're proposing these proposals, and we discussed the role of the PA in protecting the public interest. And as we know that in the area of tax planning, there's also the other side of the spectrum where you have to protect the interests of the client as well. So how is that balancing act being perceived, and how would professional accountants proceed forward to be able to make sure that they are also looking after the interests of the public?
Well, I think it is a balancing act. That's a good way of placing it. But as I read, the first sentence of our code of the code is that the accountancy profession is in the unique position of a distinguishing mark of recognizing its responsibility to act in the public interest. But this standard does, I think, discuss the balancing act, which is, on the one hand, clients are entitled to organize their tax planning activities in a way that suits them, suits their needs. That tax minimization arrangements are part of that process, but that and that the taxpayer has the responsibility to comply with tax laws, make the decisions on how to comply, make the decisions on whether to accept the advice. But that if the PA provides a tax planning advice only when there is a credible basis, that is grounded by tax laws and regulations, then that achieves the balancing act. So while taxpayers are entitled to organize their affairs, minimize their taxes, optimize their taxes, or how best to do their taxes, because objectives could vary from taxpayer to taxpayer, the PA is an important role in providing advice, so that the advice the PA provides them has a credible basis in those tax laws and regulations. So that helps the taxpayer operate within those parameters. But it is a separation of the advice the PA gives, and of course the ultimate responsibility that the taxpayer has. Did that answer your question, Carla?
Very much so. Thank you, Andy. That definitely clarifies some of the interest that came from stakeholders when they've seen a particular paragraph being highlighted in the exposure draft. There is a question that came through our chat, and I'm looking to you, Andy. The question is, how does the exposure draft address problem to examples such as one of Starbucks?
Well, it gives I think it gives the construct of the ethical behavior and considerations. Now, I can't say how a professional accountant, either in business or in public practice, would have behaved or done something differently if the standard had been in effect. But what we would know now is that before the tax advice is given or recommended, that there is a stand back consideration that would have taken place. So how it would have been different, I can't say. What would have happened ethically, and I can't say that this didn't even happen either in the facts and circumstances, because I don't have any insight on the particular behavior of the PAs involved. But we know now that there would be a consideration of those reputational, commercial, and wider economic consequences. But that is also a moving target. So the first time a particular tax mechanism is deployed, although it might be credible, it might result in consequences by the way the stakeholders are viewing the arrangement. And then this forms part of the basis that the PA has when advising on future tax planning arrangements. So I think it's a fun question. I like the question. What we will know now is that there certainly would have been the required consideration of them. Whether or not anything different would have happened with regard to that particular taxpayer, I'm not sure, because I don't have any particular facts or insights into beyond the headlines in terms of the situation that you described.
Thank you, Andy. I hope that suffice for the participant who posed the question. Now I'll give it another 30 seconds or so if we see another question.
Okay.
I don't think we have any other questions, Andy, and I think that concludes the presentation today. You did an amazing job explaining a lot of the key proposals, some of them quite technical to get our head around as PAs who are providing tax planning services in this new world of uncertainty and complexity.
Well, the exposure draft just came out. I wouldn't have expected everyone who is on this meeting right now to have thoroughly read and digested it. So, so hopefully this will give you a guide as you go through the document. But we definitely do encourage feedback from you or your colleagues or other people that you know so that the task force and then ultimately the IESBA can consider those comments. So I appreciate everyone's attention to listening to my walkthrough of the proposal.
Thank you, everyone, for your attendance today, and we look forward to your submission to the exposure draft. There is another session that's targeted to the Asia Pacific time zone. If you still wish to join the other webinar, thank you very much.